Welcome. Eric Mother.com with a weekend market analysis for February 4th and February 5th, 2023. This is how markets are trading with about 2 hours to go before Friday's session comes to a conclusion. And we can take a look at BTC right here, trading at about 23,431. And we can take a look at Ethereum trading at 1660-ish. For the week, the NASDAQ is having a good week here, up about 3.5%. S&P 500 for the week, up 1.63. The Dow was down slightly, let's call it about down to unchanged for the Dow. And we can see Bitcoin and Ethereum are slightly to the downside. Let's begin with the NASDAQ weekly. Now, some obvious things here to mention because everybody's aware of them. And I mean a lot of technicians. If you take the weekly closing highs, as I highlight here and draw a trend line, you obviously get this price trend line here. And we can say that we've been trading nicely above this over the last 2 weeks. Something else also to consider is if you consider this double bottom here area, let's draw this double bottom area here. And we can also say that another positive is this is a double bottom, looks like a V, and we did clear above the top of this V formation. So that's also another good price action as far as the NASDAQ is concerned. And I've been talking about the MACDs, as you might be aware. It is the fact that we cleared this area here, and just like we saw with BTC, similar situation on its MACD on the weekly, we've had exactly what we would expect, which is a positive reaction based on where the prices had stalled. This is where the MACD rolled over previously, but you can see in early 2023, things have changed and we are now above this area here. Actually, anticipate the market if it decides to do so. If it moves its MACD above zero, expect this market to ultimately continue pushing to the upside. I have to say, if you're looking for a little bit of a resistance area, in my opinion, exactly where we're trading right now on the NASDAQ is an area to watch for potential resistance, because this is where we break down, and after breaking down, let's call it beginning part of 2022, which is this area here, we stalled here in the middle of the year 2022, and we are exactly in this range. So I would not be surprised that this becomes a challenging area and that week to week we roll over downwards. And with the understanding that movement above this area here only serves to tell us visually that we are moving higher. Now, this is 2 years of weekly data. Let's take a look at 3 years of weekly data. Just want to show you that this line is legit in the sense that if you take the lows of early 2020, draw a trend line from there on its RSI, you get this break point, and then we take that breakpoint area and we get like that, something like that. Notice that this also turned into resistance late 2021 here, and this is 3 years of weekly data, and then the same thing here. So this is an area in the market that could lead to resistance week to week as far as the general market is concerned. Net, we are now above an upward sloping 50-day moving average and a flattening out 200-day moving average. Take all those things into consideration. Net, this is still a market that is sideways to higher, especially if we end up forming a short-term base here sideways for a while, and if we can engineer a breakout after that, that breakout is what would lead eventually to the possibility of a crossover between the 50 and the 200-day moving average. We also had some strength in the market this week as the NASDAQ was above 69.1. If it can reclaim that 69.1 threshold on the daily, then we might still see another push to the upside. Quick note here is the last time we had uniform activity rejection at the RSI 69.1 threshold. You can see that this was a topping action here, and this as of right now is uniform activity above 69.1 back below it. So it's an area of concern, especially if it is confirmed by the weekly resistance as has already been discussed. Hour to hour, as far as the NASDAQ is concerned, I would suggest this trend line on the hourly means that the market, even with a pullback, is still sideways to higher. In other words, short term, if you're looking for a reason to be a little bit cautious, maybe trim down some bullish positions, is if and when we break below this trend line on the hourly for the NASDAQ. So it will not surprise me that by the end of the day, end of this week, the next couple hours or so, that the market closes higher from current levels as the NASDAQ holds this trend line as support. The Dow. On the weekly, again, we can see this emerging situation here. It's a very simple, well-defined trend line that connects the highs from 2021, April-May period, highs of November 2021, and then recently here, this is where the Dow has been stalling. So clearly, if we are going to go higher, we must take out this line. And failure to take out the line leads to a simple conclusion to anticipate a rollover in the markets around current levels. That's the RSI, and you can also draw a trend line. If you take these weekly closing highs, you can see a trend line something like that. Again, if the Dow is going to go higher, it has to clear this line here to the upside. Otherwise, we are looking at a situation where markets could be looking now to be down or sideways. For the Dow, it would need to clear this recent November weekly closing high if it's going to go higher. So let me give you that price. It's a nice price to watch, because if the Dow is going to move higher, it needs to clear that level. That is at a price of 34,429.88. Again, the weekly closing high from November 2022. Failure to break out would mean the market has cooled off or even looking to pull back slightly. Now, no market, even the most bullish market, ever goes in a straight line. But I would say breaking this area, these lows in December, if we break this area, might be a reason to be cautious. If we end up breaking these lows on a weekly closing basis, a break here below this range could signal a market with an appetite for lower prices. Right now, I don't see any major sell signal. I just see a market that is, from what we can tell here, still in this range right there. So above the range definitely would be bullish, and below the range definitely would be bearish. This sideways look on the Dow is further confirmed by the daily RSI. You can see a wedging situation here, where ultimately what the bulls want is a breakout above this area so markets can blast above this range, and bears would be excited if this ends up being a wedge that eventually breaks to the downside, because that would suggest we are going to be threatening to break recent lows, either these lows here from January 2023 or the lows here on a daily closing basis from December daily closing lows. So day to day we're in a wedge, and we might just have to sit tight and wait for this wedge situation to resolve itself. Now, I need to point out, it's not unusual that the market plays games. It gives you a fake breakout only to break down. That happens a lot, as the market is full of tricks. Or you get the reverse, where you get a breakdown, which is a trap for those who are going short, only to break out. So we also have to factor that into our thinking. This wedging pattern on the Dow can also be seen on the Dow hourly. S&P 500 on the weekly, just like we see with the Dow and the NASDAQ, would need to clear this area here if we are going to go higher. Taking a look at the NASDAQ monthly, and this in my opinion is the most important chart in this weekend's market analysis video for this month and going forward. The NASDAQ is going to give us some idea as to the intention of the market. If the market can move the NASDAQ above 50 for the month, then anticipate a strong to sideways market, as long as the NASDAQ can hold its monthly RSI above 50. Failure to hold 50, and the more we stall around here, especially on the weekly, the more it means that the next meaningful direction is sideways to down. But I would say be on the lookout. The NASDAQ above 50 could actually set the stage for a fantastic continuation of the recent move higher. By the way, on the monthly for the S&P 500, as long as we are positive for the month, then the market should be sideways to higher. As long as we are positive for the month, market should be okay, sideways to higher. Be on the lookout for a situation where the S&P 500 breaks back below 50 on the monthly. If it breaks back below 50 on the monthly, expect the market to expand to the downside for a strong pullback situation. In other words, if the S&P 500, which ended the month of January above 50, drops below 50 on the month, that opens the door for a big down month on a month-to-month time frame. Right now, we are still positive for the month, so things are still sideways to higher. In a sideways to higher market, of course, breakout stocks are moving higher. This one here, recently mentioned as a breakout candidate, is following through on its breakout, mentioned on Mother.com twice here over the last 2 weeks or so. ALGM, mentioned just last week for paid clients, is up nicely, as you can see here for the week, up 17%. And a side note, notice here, trading at 20 in October, now trading at 41.42. And of course, there's another breakout here. That's why the breakout game can be very good in timing and in decreasing the amount of holding period while giving you the best opportunity for owning explosive moves. ALGM, mentioned just last week. As I continue to encourage you to play breakouts, take a look at this one here. LPG breakout here in April on the weekly, and recently another breakout here, and continues to run to the upside. This one mentioned here over the last week, and also that April breakout for paid clients, an entry somewhere there, and recently this breakout here was in play. Taking a look at ELF, we can see he has essentially doubled since our October breakout, or working on a double here from the mid 30s, now trading in the 70s. Here is the October breakout, and recently here, couple breakouts here in January this year, and just this week, the stock has exploded higher. MBLY, we had a breakout alert sent to clients last week, and this week is having a nice show. For the week, it is up this week about 18%, showing some leadership there. And again, this was mentioned just last week before this week's nice gain. DRCT, we can see here, has had a nice run here over the last couple of weeks. In fact, our breakout is somewhere here, I believe. Somewhere here, a little bit higher. It would have been nice if we had caught this ideally here on this breakout. Would have been nice because this would have been already close to a double in price over the last 3 weeks or so. DRCT mentioned twice here in late January. So in a market that is sideways to higher, of course, breakouts are a valid strategy. Now, switching gears, take a look at the Nifty now. We can see for the week, did manage to have a little bit of a recovery week there. Not a big surprise. Remember, we were looking at this possibility based on this previous move here on the weekly for the Nifty coming off the lows of June. And this area was essentially being tested. And man, is it perfect uniform activity support or what? So there you go. So that's my uniformity concept. You enter, or at least it gives you a reason for a bounce, and we are getting exactly that bounce. This is the 2-year daily. In fact, if we take a look from another perspective, which is 5 years weekly here, going back to the lows here, this V-type recovery, take the lows right there and connect it to the lows in this area. You see that there's a reason why this is holding support, if I draw it that way. So as long as we are holding this blue line on the Nifty, this market is still sideways to higher in the months ahead. Now, of course, if we end up breaking this line, then be on the lookout for a substantial sell-off that might last weeks, if not months. On the daily for the Nifty, number one, of course, market participants are very aware of that 200-day moving average, and they've used it previously for support. But as far as I'm concerned, my RSI was also telling me the same thing as I discussed last weekend. Coming off the area here, this is where the RSI held. Prices came off the lows there. Take that area of the RSI and extend it out, and you're going to get very beautiful re-entry areas here. You hold with uniform activity for this entry, uniform activity below the line, back above it for that rebound area. And now we can say even here, markets were holding, and now we're back above that level. So support only makes sense that prices are holding support. Another way of looking at it is a simple line, just like we see with the weekly. On the daily for the Nifty, this line here should have told you to anticipate a market that could bounce based on this double bottom support on this trend line. And again, on the daily, as long as we're above this line, anticipate a market with an appetite for sideways to higher behavior. And if at some point in the future, should we break this trend line, be on the lookout, because markets are going to show that they have the opportunity to aggressively attack lower prices. In other words, below the 200-day moving average, institutions are going to have to be protective, and they're going to be making sure not to be caught in a washout. So below the 200-day is a reason for people to be defensive. On the monthly for the Nifty, personally, I think this is looking good as long as we are positive for the month. Again, as long as we are positive for the month, the Nifty is looking healthy. Take a look at this area here. Draw it something like that, and this is where we move above the range and we have a good reaction in the market. This is in late 2020, somewhere around there. We take that information, and anytime in the future you hold support around this area, which is what we did. Notice how the market responded here and held this area here, and now we want to hold. So as long as we are positive, that line is holding, and that's an area where the market could use for strength to build for the next run to the upside. Another way is take the lows here, and these recent lows, you can see a trend line forming, a supportive trend line. As long as we're above this two lines, this is a market that is sideways to higher also. Now, with the understanding that if you break this line, these two lines, then this market is potentially going to be going lower. But as long as we are positive for the month, things are looking good to outright stable to outright bullish. By the way, on the weekly for the Nifty, remember holding RSI 50 with uniform activity tends to lead to good price behavior, and as long as this RSI 50 support can continue, this market should be sideways to higher. Same conclusion here with the BankNifty. This week held RSI 50 with uniform activity. That's a nice V-type formation, and this weekly is also looking stable to bullish at this time. Taking a look at the 5-year weekly for the BankNifty, a simple line connecting recent weekly lows tells us that as long as we are above this blue line, which is what the market is using for support over the last 2 weeks, as long as we are holding this line, line, again, another piece of evidence visually telling us to anticipate a sideways to higher market. And we also can use this line down the road, because if we break this line, we have to be vigilant for lower prices. The Canadian market on this 5-year weekly is similar to what we've seen with the S&P 500 and the NASDAQ and the Dow. This area here, so I won't spend so much time here. Again, we're about to ask a question of the markets here. Are we able to clear the topside line, or is this going to be resistance area for the TSX? On the 2-year weekly for the TSX, now that we've cleared this late 2022 weekly closing high from November, we need to stay above it if we are going to maintain our breakout status of a market that wants to go higher or at least be sideways. It needs to hold above the breakout level, and as I discussed last weekend, 20,485.66. As long as we're above this price, things are still sideways to higher. If we drift and break below this price, that's a red flag, and one would need to be vigilant. Below this price, bearish. Above this price, markets are stable to bullish, and that's the TSX. Taking a look at gold, I'm not surprised by this rollover. Remember last time I told you there's something developing on the monthly charts, and I'll share that next time. And this is the next time. Remember, we are seeing this uniform activity rejection like we did here at RSI 69.1. That tends to be an area to watch for reversal. This uniform activity was here, and eventually we did roll over. And now we see another RSI 69.1 rejection, and we are moving things down. So that makes sense. But for my analysis, what I was trying to tell you, and this was already taking place before it happened, I could see this happening. It was just this area here was going to be a problem. This is the monthly for GLD, and if you understand how to read the RSI, this was always going to be a problem as far as I was concerned, and already reacting to it. Last time I did tell you to be aware that the dollar could find support. I discussed that and why. Another reason on the monthly for GLD is this line here. So this line is where we break down in early months of 2022, and this is now backtest failure, and of course there's this band of resistance here. So if you take all that into consideration, in my opinion, gold for now is sideways to down. If you recall, I discussed with you why the dollar looked like it could bounce. The reason was very simple. It's based on, again, on my uniformity concept. This is where we come off the lows, and you can use that information by drawing what I call a uniformity line. And I discussed this before it happened. So really, support here was good entry there, and this was what the market was telegraphing, at least what I could see happening. So I'd say the dollar for now has bottomed. As long as we're above the blue line, this dollar should be sideways to higher in the months ahead. That's the uniformity concept. You can take a look at this from a longer perspective, draw a simple line, and you end up with the same conclusion. This line right here. I mean, I know it's not simple, but that does look scary simple. So the dollar right now, as long as it's above the blue line, should be sideways to higher, and then of course this other line right here. As long as we're above those two lines, the dollar is sideways to higher. Take a look at the XLE, which tracks energy space, and here we can see that breakout above 90.26 is now failing. So already we are starting to see red flags. And don't also forget that we have this improvement month to month in prices, but now the RSI was rejected when trying to move above 69.1. In other words, the RSI is now showing negative divergence, which is again another red flag. It's early in the month, but looks like these red flags are all over the place. On the weekly for the XLE, if we take this weekly closing high from November 2022 at about 92.5, this is a failed breakout, and on the weekly this is also another red flag. Now, if we take this weekly closing low at about, let's call it 82-ish, if we break below this area, when we break below this area, that would be a second red flag and a reason to understand that the energy bull run could be taking a big break, or essentially could be over. But it's going to need to break below the weekly closing low here from the lows of December 2022. So right now in a sideways market, but with a failed breakout, things are leading lower to sideways. Taking a look at the USO. Now we understand that when markets hold RSI 50 with uniform activity, they tend to go back to new highs. This is trading 101 as far as I know, and as far as my research has shown me over the years. And now we are seeing something completely different. This is USO, which tracks crude oil. So in other words, gas prices, petrol prices. We've been seeing this repeated RSI 50 rejection. This is rejection around RSI 50. This is a market that is leading leaning sideways to lower. More importantly, on the monthly, USO is entering a period where it is dropping its monthly RSI below 50. That opens the gates and opens the probability for a gigantuan big down month. So understand that. So as long as we are trading below 50 here on the monthly for USO, if we continue below 50, expect this by the end of the month to be down and expect it to close towards the lows of the month. To correct this, USO would have to hold its monthly RSI above 50. BTC is rolling over ever so slightly, but in a pullback mode. Ethereum is unchanged for the day at 1644. But here's the thing. BTC has been strong, of course. Why? Once it moved above 69.1 on the daily, which is this phase here from about 17,000 to just under 24,000, that's above 69.1. But something's happening here. You can see we've just formed this uniform activity recently above 69.1 and back below it. So that tells me we are starting to see BTC giving a pullback signal, with the understanding that remember I was telling you that there was a good likelihood that BTC would have to make higher highs and then form this divergence. So that's the divergence I was talking about. More importantly is this RSI 69.1. That's a concern. If you're long and you've been seeing some good profits, taking profits around here is okay. You can always rejoin the move higher if it breaks out again. You can always join the next breakout. No big deal. But I also think it doesn't mean that this is the end of it. Now, I'm just saying in the short term, if we're going to see a big run down or a big sell-off, this line here would have to be broken to the downside. This recent daily lows line would have to break before we can see a massive plunge. So we can still pull back and be in a good market. Now, on the 4-hourly for BTC, this is the issue that I was seeing throughout the week, is this improvement in prices, improvement. But you can see your RSI have been continuously making lower lows. And this recent low here of the RSI coincide with the higher prices. That's the strongest type of negative divergence, when you make a move to short-term highs, but your RSI fails to move above 61.8. Anyway, so what I would say is this. We have this divergence, and then we have the RSI pointing down. So we got a line. You can draw a line like that, which from a timing perspective, this would be where you want to sell at the highs there. In the short term, the line to watch is this RSI lows on the 4-hourly. So you can see how it's a wedging pattern, just like we saw with the S&P 500. So in other words, if we end up holding this black line and we eventually break out above this divergence line, this actually pushes the daily back above 69.1, and we see another spike in the cryptos. And in the next couple of days, also breaking below this black line, the RSI lows trend line on the hourly, on the 4-hourly, means we could get a strong pullback. So yes, there's a pullback already taking place in the cryptos, but is it really that meaningful? It depends on the weekly. Remember, on the weekly, we've been concerned, or at least I've been talking about this area here. Or let me change colors there because that black line is not well defined. All right, so we've been talking about this area here. So this weekly is something that is being repeated all over the Canadian market, US market. So we can draw it as such. So I would say this is an area of concern here on the weekly, similar to the NASDAQ, Dow, Canadian market, and S&P 500. The weeklies need to clear this area to the upside. Otherwise, we are looking at markets that are showing rollover signs. If we're going to move higher, we're going to have to clear this line to the upside. And if we do, expect this move to continue moving to the upside. As pointed out, Ethereum also has the same area of concern. Again, this is something we see as demonstrated over the last couple of weeks. This is an area of concern. We need to clear this area on Ethereum's weekly chart. Otherwise, this could be resistance area. What needs to happen in the short term is Ethereum would need to break out above the recent daily closing high. That breakout over the last couple of days has been stalling. As you can see, there have been attempts here over the last 2 weeks or so to break out, but they've all been unsuccessful. So I would say Ethereum would need, depending on your exchange, it's the daily closing high from January at about 1660-ish. So this area needs to be broken out to the upside if there's going to be a push higher. Failure to break out based on those weekly charts means that Ethereum eventually slowly rolls over. But even with a pullback on the daily, don't expect a massive sell-off until when we break this recent RSI lows line. You can see this line here is also being used over the last couple of days for support. As long as we're above this line, things are stable to bullish short term for Ethereum and the cryptos. And we know that if it ends up breaking this area to the downside, be on the lookout for a strong sell-off. Otherwise, I do suspect and think that these lows are going to hold. or at least the lows from June. I think these lows are in. Those lows might stay in place for a while, and I mean months if not years. We shall see. And these are your charts as we are about 45 minutes away from the end of the week. I am Eric with Mother.com, and I leave you as I found you, in the love light of the one infinite creator. Go forth rejoicing in the power and in the peace of the one creator. Adonai.